Hey everyone, hope you're having a good day. My name's Andy. My channel's Finding Value. Today we're going to do our kind of overall market look at ratios and market conditions and see what's going on there, what's outperforming what. We've had a pretty weak overall market in terms of S&P 500. We're starting to see commodities. Some of the companies themselves are pulling back. But overall, the CRB index itself is remaining very resilient, and it's actually improving against the S&P 500. We can show you that in the ratios. So even though the S&P 500 may go lower, we are remaining resilient in the commodity index. So let's dive in, and I'll show you what I'm looking at. This is the CRB to S&P 500. It is continuing to outperform the CRB indexes. We are basically breaking a new high here. This was a kind of a close there. There's our break, and we're continuing higher. Big picture view, this is us moving on up. Looks quite actually strong, very strong. And this is just going to take time for companies to catch up. You're going to see some sectors outperform others, and others will lag. And you just have to be patient. So the market conditions for commodities to outperform stocks is still intact, and it still looks better than ever with this nice big launch higher here this past week. This is a week. The weeklies, we actually outperformed very well this week. Looking at we're going to go into some other ratios. Platinum to gold ratio. The platinum to gold ratio was actually favorable for platinum. You can see a nice big bullish engulfing this last trading session where platinum outperformed a lot of different commodities. I've been a buyer in platinum down here. I've been cost averaging in. I think that this ratio is very favorable for platinum, and we are still sitting on top of the big pattern of this descending wedge. So it's still favorable for platinum. Platinum is outperforming. Well, let's see if it's outperforming palladium. Yeah, it looks good for platinum to outperform. We have these large, big movements and then the small drawdowns. So this would be beneficial for the platinum. So platinum looks like it's about to outperform palladium here at any second. And then we're seeing platinum outperform silver. I've been a huge buyer of platinum in this general vicinity here. If you've been on the website, platinum member, you know that I've been loading up on platinum. And we are starting to see some outperformance. We've got kind of a broken downtrend here that is, I think, ready to move higher, favorable for platinum. Looking at the gold to silver ratio, gold is still outperforming silver. Silver's been quite weak. I think that we're just early to this bull market. There's gold taking off. Gold has been the best performer in the short term. We've got nice, strong resistance right above it, and we'll see if we can break higher or if this is going to bounce lower. When markets sell off, people prefer gold. So we're in a sell-off of the overall markets, and I think people are preferring gold at this time as a safe haven. They're getting a little bit weary on silver. Again, I like silver, though. I really do like silver. Dow Jones Industrial Average to gold. Gold is outperforming the Dow Jones. The Dow Jones looks like it's putting in on a monthly candlestick a bearish pattern where we're going to continue lower in this ratio, which means that the Dow Jones Industrial Average is underperforming gold, that gold is the spot where you want to be. And I think this will compress much further than what we have. Gold to oil ratio, oil is still remaining very resilient. We've broken this trend line to the downside, signaling that oil is going to outperform gold. Oil is outperforming a lot of things. It's doing very well. So I remain bullish on oil because oil is outperforming other assets. And some of the companies, yeah, they're kind of loafing around, I'll call it. But overall, the oil market's been very resilient. Copper to gold ratio, we've been just moving sideways in this channel. If this dives way lower, what that means is that we could have some problems in the market. But right now we are at support, and we'll have to see what happens. Uranium's been outperforming a lot of things. So this is uranium outperforming silver. Silver's been going down, but uranium has been basically moving sideways. We've got uranium to, I think this is the gold ratio. It's GC1. Oh, this is uranium to S&P 500. Uranium's outperforming the S&P 500 because the S&P 500's been dropping. And remember, these ratios can move. If the denominator drops, it still can go higher. And it's still outperforming. Uranium to gold ratio has been just moving sideways here. We've got uranium to crude oil. Crude oil is outperforming uranium at the moment and is still continuing to decline. And then we've got uranium to copper ratio, and uranium is holding its own against copper. Looking at some of the other areas, we've got lumber here. Lumber continues to move sideways. This actually looks kind of bullish to me because we've got the large buying pressure and the smaller selling pressure. That usually sets up for a move higher. It is putting in a large pattern, almost like a consolidation pattern, in a long, big consolidation pattern at a higher level. Nickel's getting a little bit of a sell-off, but again, we've just really been moving sideways at a very elevated level compared to history. Palladium moving up today, looking quite strong. Cocoa futures moving sideways. We've got wheat futures that is in a consolidation period, and we could even pull back a little bit more. We've got soybeans just consolidating at a very high level. We're right up here on top of all these patterns. We have corn futures that's consolidating at a very high level. We've broken out of all these resistance lines, looking quite strong. This is copper priced in dollars. We are getting a pullback. You can kind of draw this trend line there. And we've pulled back some for copper. We've got the, let me go to the PPI. This is the commodities. They continue to be resilient and head higher for the producer price index by commodity for all commodities. It's been on a tear. And the latest data was in March of 22. We've got this one, I think, is the M1 money stock that continues to roll higher. That's going to be inflationary. We've got housing starts that are remaining resilient at almost 1.8 million. And then we've got an 8.5% inflation rate that is about to break a very long-term downtrend. And if we break that, it's going to see a lot of inflation, guys. A lot of inflation. Looking at some of the other stuff, we have aluminum. Kind of just looking at some of the other commodities. That's had a pretty big pullback here recently. You can see this just kind of pulling on back quite a bit. The aluminum companies, they've also pulled back quite a bit. And I think we're getting to areas that might pique my interest. And this is the Baltic Dry Index. Again, I think we're going to go higher in the Baltic Dry Index. Seasonality-wise, it's favorable for the Baltic Dry Index. We've got large buying pressure, small selling pressure, and I think we'll eventually head higher over time. So you have to be patient there, guys. You got to be patient. So that's what I've got for the overall market conditions and ratios. So when looking at those, what I would gather from it is that the CRB index is doing great against stocks. It's not the problem. Stocks are the problem at this moment, and they're coming under pressure. And I'll talk about. Let's go into stocks real quick, and I'll show you what I mean by that. So this is kind of the overall market here. So this is the S&P 500, and our lows are coming. We've a lower high here, and now we're going to start to make a lower low. This is breaking down to the downside. This does not look very strong here, guys. And this is going to put pressure on our commodities as people try to sell everything in a margin, a highly leveraged stock market. But this is breaking to the downside, this last support line, and we are making a new lower low. So this is a downtrend, and it's probably going to head lower. This could impact our commodities, and we're going to have to be patient here. Looking at the U.S. Composite Index, that basically tech companies, this is also making a lower low, and we are going to probably see some selling pressure in the stock market, which could impact our commodities. Just be patient. I'm riding through it, and I will be buying more if it pulls us lower. That is an if, because remember, nobody knows the exact future. But this has had an impact on some of our investments. And then looking at some of these other companies just to gauge what they're doing, this is still going sideways, but has broken out below its uptrend line. And we're moving sideways. So you go upward momentum, sideways momentum, then usually lower. That is not looking that great, in my opinion. We are starting to see lower highs, a rounding top in Apple, where we could head lower potentially. And that's Apple. Amazon already breaking to the downside. We had some support here, and it was holding, and now we've broken below that support on some, looks like, bad earnings or something like that. Facebook looks like it's got a little pop here, but again, this is more of a rounding top, and we'll see what happens. Doesn't look great. Google has that rounding top as well. You can even draw it like this, and then I can take this one out, and we are heading lower. It is lower today and not looking too great. Baidu, this is a little bit different outlook on Chinese internet company. That's moving sideways for the most part. Visa getting a little bit of a sell-off. That has broken its larger, bigger pattern to the downside and is moving sideways, where we could potentially head lower, depending on interest rates. MasterCard's also breaking that uptrend, and we'll see where that ends up. Probably not good. The trade desk is starting to head towards its support line. We'll see if this support holds. Roku is way down there, and we'll see what happens here, but it's hanging on by tooth floss. I said tooth floss. It's right on the support resistance line. And then EEM, emerging markets, has been bouncing around, and it's also been a little bit on the weak side with the stronger dollar and all that stuff. They also have weak currencies at the moment. So that's the overall markets, guys. They don't look too good, and they could drag some of our stuff lower. Commodities are outperforming the S&P 500, so that's all intact there. But that just means that we could fall. We could still fall, but just fall less than the overall markets. I think that's probably the likely outcome. And we're going to have to be patient. We're just going to have to get our shares, cost average in, go slow, put your favorite companies out there and just watch them. And if they pull on back, add a little bit in. And I do think that the money's going to rotate over. And I think that the markets are going to have to stabilize a little bit for us to go on higher. So we'll see. We'll see what happens. I'm remaining very positive on commodities. All the market conditions are there. Real estate is strong, and we're going to continue to monitor it. The data is not out yet. We'll have to wait till the beginning of May. We'll see what the data shows for real estate, and we'll go from there. Remember, one data point doesn't make a trend either. So it's going to take time. All this stuff takes a lot of time, and just got to be really patient. And what's coming ahead of us is going to be big. It's going to be a big bull market in commodities, is my opinion. And don't forget to give me a thumbs up on the content. Subscribe to the channel. Subscribe to the website. The Platinum membership gets you all the information. We're doing weekly Zoom calls for question and answers. We're riding this stuff together. Sometimes that's needed. You need the help. You need the confidence, the support to say, hey, look, everything's still intact. We just got to ride through this. We're just getting through a little bit of selling pressure in the overall markets. And, it may last a little bit. It may last a little bit. But if we get better buying opportunities, so be it. I'm going to go buy some more. That's what I'm going to do. Pretty simple. My strategies are pretty simple. So if that sounds interesting, definitely sign up for the Platinum membership. That gets you all the information. The Silver membership just gets you the financial stuff. I don't post as much Silver information as the Platinum. The Platinum gets all the goodies, in my opinion. So that's the one that I would be really interested in if it were myself. All right, guys. We'll catch you next time. This is Finding Value.